the standing policy at the Federal Reserve for quite some time has been to keep inflation somewhere around 2%. What that really means is that over time, the value of the dollar, their goal is to decrease the value of the dollar by about 2% a year indefinitely. And that's stable enough not to disrupt the monetary markets, but it's also loose enough to encourage spending, which promotes growth. I think that's the general argument there. The thing about that over time is it is the policy of the Federal Reserve and of the United States that your money is going to become less valuable over time. That's an important thing to know, because especially if you ever plan on retiring and you ever get to a point where you're on a fixed income, if you plan on being retired for 20 or 30 years, which is not unreasonable for a lot of people anymore, what you have has to grow with you at a rate that exceeds the rate of inflation, or you're going to be losing ground. So that's a significant point. But you really want to understand that, because your expectations need to be aligned that, you're not just trying to grow 7% a year on your investments. You're not just trying to grow 7% a year just as an arbitrary number, but you have to take into account that inflation is going to occur because the government wishes for it to occur. So you really want to target your growth accordingly. The issue that we're having now, obviously, is that we're way above 2% inflation. So, yep. When you're talking about grandpa, I'm like, getting a little gray here, getting more than a little gray here. And just to verify how old I am, I remember as a kid when unleaded gasoline, first of all, I remember when there was leaded gasoline, but I remember when the price of unleaded gasoline was around 81 cents a gallon.
Yep.
So, we're out driving around today, and in our little corner of Northwest Florida, it's back into the 345 range, which is painful. Just drives home the point, though, that not everything is inflating at the same rate. And so I want to throw that back to you here for a minute. Don't you think that this really warrants everybody taking a little bit of time to examine how inflation is going to impact them personally for that reason? If you happen to be the kind of person who commutes, say, 45 minutes a day by car, and you're putting a lot of mileage on your vehicle, the fact that gas prices are up something like 50% in the last 18 months, that's a significant impact on your pocketbook. That's a lot more than 9% or 7%. If you are in that kind of a situation, the inflation is going to impact you a little bit differently. So what are your thoughts about how inflation rates impact different parts of the economy?
Well, first I want to respond with, I remember when I was 16 and I got my first vehicle, buying gas and filling up my tank with loose change in my pocket. So, $1 or $2 went a long way back then.
All right, Grandpa.
Exactly. There you go. What's interesting about that question you asked is, I kind of feel like our government's a little out of touch, right? Yeah, they released his report. Right. That can't be right. We hear these numbers, 7.5%, 9.5%, and they're very high numbers. Historically, I think that 7.5 is the highest since the 80s, I believe, early to mid 80s, 22 years, more than that, something like that.
40 years, basically, yeah.
Yeah. But it, like you mentioned, it's a lot higher than that in most categories that we actually use on a day-to-day basis as the average consumer. You know, our food items, our grocery store items, our car, our vehicle purchases, our home purchases. The You could find in our area 1 year ago, you could get a very good house for less than 200,000. I mean, you could have a family home with 3 bedrooms for $180,000. Now you're lucky to find one with 3 bedrooms for less than 300.
Yeah.
So it's really shot up. That's not 9%.
Well, yeah, I mean, the value, I bought this house, my wife and I bought this house about 2 years ago. And the price per square foot that we paid for it versus the price that we would probably get for it today. In fact, our next door neighbor just sold their house. And if we got anywhere near the price per square foot that they got, we'd actually be up a little over 50%
Yep.
in 2 years.
Think about that. And the average home should see or realize a 3% inflation, they say, for real estate. So my point was there is, as a household, that number's actually exaggerated. I think on a day-to-day basis, you, me, our listeners, we're experiencing 20% inflation with our
Right.
consumable items we have.
The Purposeful Podcast.